Hi, this is DayTraderRockStar, and I'm here for the second part of this video talking about shorter time period trades. We're going to concentrate on the 15-minute and 60-minute trade setups on intraday charts and how to get by the volatility of the daily charts, especially after this recent violent and volatile market correction. So you want to try to get away from that volatility. But the setups still show up. They just show up in a tighter time frame here. Again, we left off with the 5-minute S&P chart. It was a good example of just a channel line and waiting for your indicators to set up. Now, everything still stays the same. The important aspect of becoming a successful trader is to have that discipline and patience to wait for those setups. In the morning, like we're going to see Monday morning's open is probably going to be really affected by overnight news and overnight European news. So we can't really, futures are about to open another hour or so. And, we were going to see what's going to happen at that point. But instead of predicting the market, we just wait for those market signals to set up. So, again, a good example right here, a channel line. Whenever you have an established channel line, especially the first two levels, is all I'm looking for. A level up here, a level down here, and then the third one, and then we could always start trading off the fourth one. But this is a very important level here whenever you have a standard or a established trend line, meaning that we've already hit 2 points. That third point in the 200 period moving average when it lines up is a high indicator area there. So we always want to take that, especially at the stochastics. Now, I still use the stochastics setup on the 5-minute chart on stocks. I think that's very important. So this is the 5-minute chart we're looking at right now for real intraday trades, and this is what I usually really rely on this for the S&P trades. But we're going to go look at some other patterns and kind of adapt these to anything. You can adapt these on the 5-minute, the 15-minute, or the 60-minute chart. This is again on the daily chart right here, but I just want to give you a good example of how we set these up. The high probability buy area is going to be lower trend lines as the stochastics are pulling back down. It's a wedge pattern, and all these patterns give you projected targets. So this might be a daily pattern setting up here, but intraday on a 15-minute chart, this target could be hit in a matter of hours instead of waiting for a daily move of a couple of weeks to get up to a projected target. So even though the price level would be wouldn't be as drastic, you're still going to see that percentage move. So that wedge pattern, again, another good example of a channel line. I just want to go over again. 1, 2, 3. These 3 levels here, very important. This is a fourth. This is another test here, which is always the fourth. It could either be down here or up here, but as long as these are established, then you can start trading off of these the next 2 times. So each time we pushed off of there was a nice bounce. But again, high probability setup. Push up here. This is a different type of setup here where you have matured channel holding the midpoint line, and then you look for that break up, and again you can see a measured move here, a measured move off of this one. So very nice setup off of that. It's a good example of that. Again, another example of Best Buy here, which is a nice channel, a wedge pattern. And a couple of these we go back and actually, because I usually screen save a lot of these setups before they even happen, so I always keep them. These right here actually, not right that. This right here is just a screenshot of a setup that I sent out as what we call a kick-ass trade of the week. So these are just examples or past trades as I set them out. This side, buy trigger was 36. Now I can go back and look at these patterns and see exactly what happened. We broke out of that channel there, and what a run we made off of that. So that was that's a good example of what we could see off of a channel. FLR is another one that was a good setup, and I took a screenshot of it so I could go back and look at it. This happened in March, and again, this is what I want to talk about here is whenever the 200 period moving average and the trend line meet up, and you hear me a lot talking about that intraday when we're trading on the radio. I said, all right, there's a nice trend line, but it's also the 200 period moving average is also set up here, and you can see that on the 1-minute chart, even the 5-minute and the 1-minute chart. And that's a great setup on any way you see it. So whenever you have an overhead resistance area or a trend line that we hit at least 3 times, you're going to look and it lines up with the 200 period moving average. It doesn't have to be exactly on it, but both levels fall basically as an area of resistance. that breakout should be a more explosive breakout, and that's what you'd be looking for. So FLR, we'll just go take a look at that one and see how that one reacted. And actually a nice channel back here in the day. Another nice channel, a nice breakout from there. And I didn't even go into that. That was another trade. But again, this is also a good example of waiting for your trade to happen. You know, you have a decent trend line. You say, all right, these are the important levels I want to pay attention to. You know, stochastics oversold here, stochastics oversold here. The breakout, boom, there's the breakout. Measured move target brings us up around the 200, even though it does go. And now we have another pattern, a very nice setup here, because you see the stochastics kind of moving along with the pattern here. But the important thing is that 20 period, the 200 period moving average and the trend line there. And again, you can see the result of that break, and you see a nice move off of that. So we want to start to identify these intraday, see these on the 15 and 16 minute chart, and take these instead of on the daily right now. And until the daily comes back around, because of the big volatile spike downs and these big candles we got, it's going to take a while to set up some really good setups, which are what I like to quote high probability setups. It takes the risk out of the market. We get some nice moves, and we continue to profit. So nothing's really changed except the time periods. Let's see a couple more here. Again, here's a good example of, again, to the bullish side or to the bearish side. You can easily see this. This is an intraday chart of the S&P 5-minute. A nice upward slanted trend line here, but we saw over here we actually have a kind of a high, a double top here, but you could start to feel that the stochastics and things, anytime we get an upward trend line like this, I have caution. Anytime we have a downward trend line, I have caution also, but I'm also picking it up on the lower trend line. This, this is a setup that I would look for a break and a pullback. Downward trend line. Again, holding the 200 period moving average, multiple indicator setup here. You have the 200 period moving average. Great setup on the 5-minute, on the 15-minute, on the 60-minute. All this setup. This happens to be on the daily right now because these were the setups that we're doing, but we'll see these also set up on the intraday. NOV here, great example of an inverted head and shoulders pattern, stochastics, lower trend line. You'll see this a lot on the 5-minute chart intraday also. And we're starting to see that now. I'm just going to look at some of the setups. Again, this is FLR now. This is, we just looked at what FLR was, floor, how easy it was to trade. All you need to do is wait for that trend line to buy there, wait for your trend line to buy there, wait for your trend line to buy here. Boom, boom, boom. Easy money. Now, it's like this is destroyed. This pattern is destroyed. But we do have the stochastics finally pulling back. And we're going to let this. It's going to be a while for this to set up. But if we go out on the 15-minute chart, this will start to see a pattern set up much faster on here. So depending on what happens on Monday, the first 2 days here, Thursday, of course, we had the beatdown. And then Friday, we had a continuation thing on something like happens like we had on Thursday. We get margin selling usually the next day. We get some downside pressure. There's still a lot of uncertainty in the market. So that Friday was a very difficult day to gain any upside. So you would actually look for some more downside here. And you want to see the volume start to come back down, and then things start to stabilize and a pattern start to develop. And when that pattern starts to develop, then you step into the market. You don't have to be forced to trade this volatile market at this point. Wait for the setups to set up. Let me get another one out here fast. We're going to roll through these. Again, downward trend line. This is the hub group. And again, these are patterns that we're going to look at on the 5-minute, 15-minute, and the 60-minute chart. Just giving you, basically going through these and showing you what they look like. All right, here's a good example of a stock continue to push up against the 200 period moving average. And I started seeing this last week. We started seeing intraday stocks pushing up against the 200. I said, watch, we have the 2200 set up here, meaning that the stock is consolidating between the 20 period moving average and the 200 period moving average. So let's just actually go out on that one and see if we can find. Let me see. AZ. That doesn't look like that stock. Let me see. Oh, here it is. So, all right. So all my notes, all my notes stay on my chart, so I could actually go back and review them. And this was a buy trigger at 1020, and 1020 basically is you're seeing this inverted head and shoulders pattern here. You tag it here, left shoulder, head, double head here, right shoulder, but we have the 2200 setup, the 200 period moving average, 20 period moving average, and then from there you can see the breakout and a nice move from there. Very nice, very easy, and something you see all the time on the 5-minute chart. So now all we need to do is just, get a good focus list together, a good 10,000 watch list, break these down to the 16, 15-minute chart. Again, a lot of them are not going to really take place until next week. Next week is when you're really going to start to see these setups. So it's not going to be an aggressive, or maybe not even a gigantic watch list this week. It has to happen on its own accord. It has to set up. We can't force anything at this point, but they will set up. All right, I'm going to try to get one more video out with the setups for this week, and I'll send those out in probably in a couple hours. I just got a lot more research tonight because we got to break down these charts to the 15 and the 60-minute areas and really start to look at them. So hope you enjoy this, and I'll send the next video out there probably around 8, 9 o'clock.